Good morning. In this presentation, we are going to see how we can trade in MCX crude oil today. Before looking into that, let us see what happened yesterday and what we expected yesterday. Yesterday, MCX crude oil opened around 5090. So this is the black color box. This is the zone where the market opened, and we expected crude to continue its downtrend, just because you can see on the previous day the market closed near, the market tested the weekly low of 5060 and closed just above the weekly low around 5086, and yesterday market just opened above that, and it was below the major resistance zone of 5120, which we expected to play a key role in deciding the trend. And also you can see that this is forming a very good support on the previous day. Then since the price is trading below that, we expected this to act as a major resistance, and we expected selling to continue till 5160 to 5180, which is a major resistance for crude oil. So let us see, after the price opening around this zone, let us see what happened after that. You can see after the price opening, the market gave some pullback. You can very well notice that after the price opening around 5090s, the market gave some pullback and went and tried to test this 5120 zone. So after testing that, the market provided 5120 provided some resistance for crude oil market. So that is the reason you can see the amount of selling we are witnessing. The market, it is a straightaway drop. You can see after taking, always we say that the support and resistance zone is not a single line. So when we say this 5120 as a resistance, it means it includes 5110 and also 5130. So this is always resistance and support or the zone. So this 5120 provided some resistance for crude oil market that pushed the market down below the price opening. So since since the price was pushed below the price opening, we can say the market has gained some selling momentum. So it was in line with the trend. So after taking some support around 5080s, the market tried to show some bounce back, and this 5100 acted as an intermediate resistance to provide some selling in the market. And you can see till this zone the market was completely dominated by the sellers. So it is a very good gain from 5110 to 5000 near 5070. And also we know this 5060 is acting as a good support for the crude oil market. Further, if you are following our presentation, and if you go through the history of charts which happened for this week, you can very well notice that this 5060 is providing a good support for this week and also for the previous week. So after testing this support, let us see what happened after that. The market tried to give some bounce back. You can see that again the market tried to hit this 5100, and you can see it also again this 5100 provided an intermediate resistance, and the market fell down. Again it is just bouncing back and trying to test this 5110 again. So what we can decide out seeing this is that the market 5160 is providing some support for the market. So market is trying its best to try to break this 5120, and always this 5120, since it is a major resistance for crude market, it has provided a good resistance here and pushed the market down to close around 5092. So this is the black color box. You can see this is the box where the market closed yesterday. When we compare yesterday's closing with the price opening, you can see yesterday's closing is around 5092, and yesterday opening is also around 5090. So we can say that yesterday opening, considering yesterday's opening and closing, we can say that it is quite a normal neutral opening and closing. But when we consider the high and low, you can see comparing with the previous day, you can notice that the low it is just above the low which was created on the previous day, just because it has 5060 on the previous day. Also it has provided some support and pushed the market higher to close around 5090 or 5080. Yesterday also the market didn't try to break this support. The market was staying within the support zone of 5090, and also the high you can see 5110 on the previous day. If you can see, the high is around 5150. So on the yesterday completely you can see the yesterday trading zone is well within the previous day trading zone. That is, you can see 5170 to 5110 around 110. It is well within the trading zone of the previous day. but it was dominated by the sellers. That is what we can understand, is that So yesterday's price movement is bit slow, and yesterday trading zone is well within the price zone of the previous day. Yesterday was completely dominated by the sellers, and today we are expecting crude oil to open more or less near 5100 to 5090. So this is the zone we are expecting to open, crude to open around this zone, and comparing with the NYMEX prices. So the opening may vary, depends upon the currency value also. So since we are presenting in the early morning, so we cannot, since the currency market has not yet opened, so approximately we can say that after making few adjustments, we can say we can expect crude to open more or less around 5100 to 5090. So there cannot be a much difference in the opening, so which indicates that the market can still go further down. So when comparing with OHLC, that is open high low close analysis, and taking into consideration this 5120 is providing some major resistance for crude oil market, and also we can see some 5000, but what point should be noted is that this 5060 is providing some good support for crude oil market. In order for the trend to continue, we need some closing below 5060 to prove that the market has broken some of the major support zone of 5060 that can push the market towards 5000 levels. But having said that, we have, since the crude price is dropping from $106 to $89.2, you can notice that it is a very good drop, very big, huge drop in NYMEX prices. And also there can always be, after a very good drop, there can always be some sort of pullback we can expect. We should be cautious about that. So what we can do is that we can expect a crude to continue its downtrend for today also. So that what we can, today we are at the end of the week, having made some profit for the because we expected selling in crude for the for this complete week, and things happened. So we made some good profit out of this, and this is the end of the week. We need to prepare ourselves for the next week. Having made some good profit, we can take we should think about the next week, and we should prepare ourselves for the next week also. Hope this is the end of this week. So today, this week also, we can expect crude to continue its downtrend. But let us see how things are in 1 hour chart. Just let us take some long term perspective, and let us see what is happening in 1 hour chart. So when we see the moving average in the 1 hour chart, which indicates that you can see this red color line, which is a long term moving average, which is quite a long term moving average which you are following, and there is going to be some convergence with the short term moving average in 1 hour chart and the long term moving average in 1 hour chart. So whenever we see there is some convergence happening, when the two moving averages is going to meet, we can expect two things. One thing is that we can expect the market to consolidate. The next thing is that we can expect something big out of this from this price action. So you can go back and see the histories of chart. You can which tells us that whenever the moving average is converging, we should be prepared for that, because that is the area where the market will take some key decisions, and the market will try to give some momentum. So since the market is completely staying in the downtrend, so we can expect crude to move down. But what we are trying to do for this week is that, since two things we want to protect our profit which we have made for this week and for the previous week. So protecting our profit is more important. So since the moving average is also trying to converge at 5120, what we are going to do is that we are going to decrease our stop loss zone from 5160 to 5180 to 5130. So that since we are expecting the crude to open more or less around 5100 to 5090, we have got something around 40 points as a stop loss. If it is opening around 5100, it is going to be a 30 point stop loss. We can target this zone. So when the price, if we see any price action above 5120, and if we see some pattern formation above 5130, and we can expect the crude to show some type of pullback, which indicates why we are following this moving average is that it indicates that the market has come to an end for selling, because it always indicates that the market is completely oversold. So what we can do is that we can try and decrease our stop loss, and we can protect our profit whichever we have gained for this week. And one more thing is that the major fact is the Indian rupee factor. So nowadays Indian rupee is playing some major role in deciding the price direction of various commodities, particularly in crude, gold and copper. So we need to take that into consideration also. So that is the reason why we are nowadays we are trying to follow the average so that we can understand something clearly in the MCX price directions. So just wait and go for a selling till 5130, and if there is any price action, if there is any support around 5120, it is always welcome to take some risk and test for buying only after this 5130 was broken. So just wait for this zone and go for a selling initially till 5130 is going to be the first strategy. And if the price is going to stay above 5120, then you can reverse your view about buying, and we can take some risk and test the market with buying. So after a very long time we are testing the market with buying. There is nothing wrong in testing the market with buying after gaining some huge profit. Whenever at times we need to take some risk and test the market with buying also, but only case is that above this 5120 to 30 zone, it is not just you are going to try something for buying around this 5160. It is going to be more riskier than that. So let us wait for the market to break this so that the average will also converge here. That will also provide some buying momentum in MCX prices, and we should wait and watch what is happening around 5160 and 5180. If the price is quite successful in breaking this and closing above that, then we can reverse all our views about going for a buying for the next week also. So all depends upon how we are going to what is going to happen during our trading session, how the patterns how going to form that. Because one thing is that why we are insisting on 5120 is that this is a zone where you can see that this acted as an average zone for this complete week. Every day you would have seen this 5120. Probably for the complete all this week we have seen this 5120, which acted as an intermediate resistance and support for this complete week. So that is the reason, that is one another reason why we are trying to target this 5120. It is not just blindly, since the moving average is trying to converge at some point, we are going to do that. Because it is a two type of thing. One thing is that whenever the average is going to converge at some major support and resistance, it is going to be valuable for us. If the moving average is staying somewhere, then we need to pick all the support and resistance only. So since the price action is going to converge around 5120 and 5130, we can initially go with a trend, because we always go with a trend. So we are going to test the trend initially, and then if there is any price action, because surely you will see this type of pattern when the price is going to break 5120. You can see that this thing happened on the 23rd of this week. You can see this will form a pattern like this 5120. It is not going to be a single breakout. Whenever the price is going to move above 5120, it will form a pattern like this to indicate you the price is going to move higher. The chart which you are following, which you are viewing now, is a 7-minute chart. So it will form a pattern like this very clearly and will show you, say, okay, I am going to move higher. So unless until you get a clear confirmation like this, please don't try to mistake this. That is why I am insisting more. Whenever we say we can, since the price can go above 5120, it is quite natural for the clients. Whenever they say something below 5120, it is not a tendency to go for a buy there. So this is only case. So initially you can go for a selling and test the market completely, stay in the trend. Only if we get price action above this 5120 to 5130, and if you see any pattern formation like what happened on 23rd of this week, you can go for a reverse view so that we can be prepared for the next week also. So let us see what's going to, all depends upon what's going to happen during your trading session. Stay with the trend, that is what we are expecting. But if the price is going to close below 5060 for this week, if we see any price action below 5060, any closing below 5060 is going to be a closing below the 2 weeks low, that is 5060. If we go and watch the previous weekly presentation, this 5060 acted as a support. For this week also it is acting as a support. Any closing below 5060 can cause as a trend, can push the market further down. That is the important thing. So that is the reason, one another reason we are saying that don't go and try to test the market like this. Don't go and buy in a falling market. Unless until you get a clear confirmation, we need to wait for some confirmation to take a trading decision. So thanks a lot for watching our video. Take care. Happy trading. Bye.